Hello, this is Rich Canlione coming to you from the CME Group trading floor. I'd like to start out with a footnote. Obviously, NKO was the unit that I was attached to that was a business unit within Dowd Westcott, within MF Global. That is no longer where we are. Just to let everyone know out there, we are now part of Penson Worldwide. That is the name we now know. Moving along, I believe the market at this point is actually in the sell rally mode. We've seen the risk trade that was put back on in the unwinding stage as the risk tolerances have become more and more fortified in Italy. Obviously, the catalyst being more and more of what we're seeing out of the Eurozone. The thinking, however, the conventional wisdom would be that the ECB or perhaps the IMF can come out of this with something as a Band-Aid. That's one of the reasons why we're seeing, obviously, the world equity market start to de-risk. Additionally, I don't know if you guys have been keeping an eye out, but China is on a bit of a slowing process. If you take a look at industrial production in China, 13.8 versus 13.2, and there's something that is not really looked at, but is something that gives you a little bit of a inkling of the slowdown. There's something called loan impairments, Asian loan impairments by HSBC, Standard Chartered, who are the dominant banks in the Asia region, have actually increased. So that suggests that loans are going to be more stringent there, which could indeed accommodate further slowdown. One thing I want to point out today, this morning particularly, is the advanced decline line. You're at basically 40 to 1, 40 sell side to 1 buy side in terms of the issues. Old double tops in the December futures particularly come in at 1172 to 1174. You could extend a trend line that goes in from, basically comes in from 10.7, comes in, intersects 1186 through the 18th, 1191 through the 20th, and 12.9 that we saw most recently, 1209 that is, and 1215. If that line were to be intersected today or tomorrow, that would be 1222.5 to 1225. I would look at those levels as possibly an entrance point to get long or perhaps cover a short from today. 8-day moving average that we all keep an eye on. The 8-day moving average is 1248. The 50-day moving average is 1194. The 100-day moving average, interestingly enough, for all our smart traders out there, 1221, and just about where that line would intersect. So keep an eye on those levels. Trade smartly. This is Rich Canlione from CME Group Trading Floor signing off. Thank you.